Welcome to the T&T Honda podcast. Whether you're buying a new or used vehicle, servicing and maintaining your current vehicle, or following the latest trends in the auto industry, T&T Honda is steering you straight. Thanks for listening, and let's get on with the show. So today we're talking about car loans and how to get the vehicle of your dreams when you may not necessarily have the credit rating of your dreams. So Navros, where does one start when they want to look into getting a loan for their dream vehicle?
Well, Emma, basically it comes down to four things that the banks are looking for. Some people refer to this as the 4 C's of credit. So the first one of that is capacity. So what they mean by capacity is, can you afford the payments? So every bank has a certain ratio that they look at, your income versus expenses. So you have to fall within that. So let me give you a really crazy example. So let's say you're making $4,000 a month, but your house payment is $3,000 a month, right? That means you're at a 75% debt ratio just on your house.
Right.
So how can you afford anything else? You still got to put food on the table. You still got to pay the cable bill and the gas and so on. So they have these ratios they look at, and that's the first C, which is the capacity. So how much you make versus how much you spend or what you have for debt payments. The next one is your credit. So what does your previous credit look like? So before I get into that, let's talk about why that's so important. Human nature, people are creatures of habit. Right? When we need to lose weight, it takes us a long time because we have to shift things, right? Yes. When the dentist tells us to floss every day, it takes us a long time to figure that out because we are creatures of habit. So when it comes to credit, we are also creatures of habit, either from a sense of, my parents didn't teach me about credit, or you fell into some bad ideas, or you're trying to keep up with other people who have stuff, and just a not such a wise utilization of credit. Or wise management of credit sometimes gets us in trouble. Outside of that, life happens, right? So in situations of, hey, I've got a business, but the business didn't go well, or there's a family breakup, or there's a sudden death in the family, and so on and so forth. So, I mean, there are these things where bad things happen to good people, or it's simply a lack of knowledge or management of things that affect your credit. So when the banks or the financial institutions look at your credit, they're looking for people with some stability behind their credit, an ability to pay, and proof that they are paying as their commitments dictate. And when you don't do that, when you're late on payments or you miss payments or things get repossessed and stuff like that, of course, that's going to affect your credit. Only makes sense. But what that means is, does that mean that you're never going to get a car or you're never going to get financing? No, there are alternatives, but we just have to be aware of what those alternatives are and be knowledgeable about, okay, if I take that alternative, what happens down the road?
Right.
So we'll come back to that in a bit. So we talked about capacity, your ability to pay. We talked about credit and how that affects things. The next one is collateral. So that's the third C. So in our case, we're talking specifically about car loans or vehicle loans. So the collateral in this case is very straightforward. It's the underlying vehicle that the customer wants to purchase. So the collateral is whatever the bank is holding as security for the amount of money that they're lending. So why is that important? Collateral, basically the bank wants to be in a position that if something happens and if they have to go after that collateral, that they're not held out any money, right? So they want something where they have an idea of how much money they can realize by getting rid of that collateral, how much money they're going to have to put back against the financing. So basically here, let's say you're borrowing on a car that's worth $10,000. The bank is not going to give you $20,000 just because you want that extra 10 grand in your pocket.
Right.
They're going to loan money based on the amount of the collateral that they have. So they look at that, and that also determines how much money a person can get. It's not just whatever you want to buy that car. So even though you think you might be getting an amazing deal paying $40,000 for a 1996 Ford Escort, right? That's not what that car is worth, and that's not what the bank is going to loan you.
Right.
Okay, so that's the collateral part of things. And then the very last thing is character. So this goes back to kind of encompasses everything. So going back to that whole idea of people are creatures of habit. So they look in the past to kind of project what your future behavior is going to be like. Now, obviously, we all have good intentions, but the past is a very good predictor of our future. So those are the 4 things that a finance company looks at when they're willing to, or when they're trying to figure out, number one, are they willing to give you money? And if so, how much? So those are the kinds of factors they look at. That's on a very high level. I mean, we could get into lots of details, but I think that probably gives people an idea of some of the stuff that they're looking for.
Definitely. How do you go about getting a car loan if you have bad credit?
So the very first thing I would suggest is that go in with your eyes open. Okay. Be aware of what's going on. You're in a situation where you may have less than perfect credit for a reason.
Right.
Understand what that reason is, right? Was it because you mismanaged your funds? Was it a lack of knowledge? Was it something that happened in life, like we talked about, a marriage breakup or a family business that went bad or something like that? So understand the reasons for that, because when the banks are looking at things, when the finance companies are looking at things, they really kind of only see one side of the story, right? Whatever they see on the credit report, whatever they see based on the credit application that you send in, they don't really get to know you as a person, right? So that's kind of number one, the case that you need to make with whoever you're talking to about getting money is, yes, I understand that I have some stuff on my credit report, but let me explain the why behind it.
Exactly.
Right? And once you can explain the why, then that gives the banks a sense of, okay, number one, there's recognition that this person knows what happened, why it happened, and there might be a shift in their attitude when it comes to credit. And that's what the banks are looking for.
Okay.
So you want to be able to tell your side of the story, but you can't tell your side of the story until you see what the other side is seeing.
Definitely.
So you need to go in informed, right? So there's lots of places right now where you can go and pull your own credit report, right? And typically it's free, right? So when you do that, number one, you're informed and educated about what the other party's seeing. And there's been some statistics that show that almost all the credit reports have some kind of error on them.
Right.
So, it's good to know just from that point of view that if there is something that's wrong, you at least have an opportunity to fix it. So that would be my first step, is check out your own credit report, see what it's saying about you, make sure it's accurate. And once you know it's accurate, if there is any blips in your credit, you need to have a why behind it so you can explain that to the lender.
Right.
Okay, so that would be one thing I would say. So go in armed with information. Second, go in with something that's reasonable. It's fine to say, hey, I want my dream car.
Yes.
Right? If you have perfect credit, right, and you've got all the capacity in the world to be able to afford that Ferrari or that Lamborghini, good on you. Right? But most of us are not in that kind of situation.
Yes.
Most of us are in a situation where we have to work with budgets. We have to work with certain guidelines and parameters. So go in with a realistic expectation of what you're looking for. Look at it not from the point of view that I have to have that particular model, the latest and greatest, and I want it in that fancy blue color or whatever the case is, right? Be open to getting a vehicle that will suit your needs. Look at that particular style of vehicle. So we had talked in a different segment about the Odyssey. So let's say you're a young family and you wanted to look at a minivan, but you had your heart set on the top level minivan in a particular realm and it's going to cost you 50 grand. Okay, fine. That's great. That's my dream vehicle for now. However, if you can get a bank to approve you for a car that's maybe a few years older, maybe has some mileage on it, maybe doesn't have all the features you're looking for, but it's still safe, it still allows you to get the family back and forth to where they need to get to, and so on and so forth, and as a side benefit, allows you to rebuild your credit so you can eventually get that dream van or vehicle that you're looking for, what's wrong with that? Right? So be open to that possibility. A lot of people, they really pigeonhole themselves, especially when they have less than perfect credit. They really pigeonhole themselves into, no, that's the car I want and that's it, right?
Yes.
And don't have that flexibility. So realistically, when you have less than perfect credit, you're not really in the driver's seat.
Yeah, I like that pun there, Navros. Nicely
Oh,
done.
definitely. Didn't even think about that. So, it's kind of the banks and the lending institutions that are the ones that are calling the shots in this case. When you start to have really, really good credit, that's when you can start calling the shots and say, no, I want this, I want that.
Yeah.
For a lot of people, though, that's not the reality of situation, right? There's always things that go on, and we have to be a little bit flexible. The other part of that is, okay, well, you're telling me I have to be flexible, but for how long? I don't want to be stuck with this car for 4 years, 5 years. I don't mind doing it for a little time, but I want to eventually work my way up into getting that car I really, really want. That's the cool part when we here at T&T, what we do is we actually work on a credit rebuilding plan.
I
right?
love
So for
that.
people, yeah. So people who have, some blemishes on their credit and have some issues about getting financing, we'll work with them to, number one, get them a vehicle that suits their needs right now,
Yeah.
but also put a plan together so over the next maybe year or 2 years, we can look at gradually trading them up into a vehicle that gets them to that ultimate one that they're looking for.
Right.
So it might take a couple of years for them to rebuild their credit, show that they've been good, make the lenders comfortable. The flip side of this is too, as they start to rebuild their credit, their interest rates start to go down.
Uh-huh.
Right. So think about it from a lender's point of view. If I've had some credit issues in the past, I'm a higher risk, right?
Right.
Makes sense.
Yep.
So they'll still loan me money. However, to offset that higher risk that they're taking on me, the way that they do that is by charging a slightly
Yeah.
higher interest rate. As my credit gets better and better, it only makes sense that they should start offering me better and better interest rates.
Right.
So when we talk about credit rebuilding, there's a twofold approach to that. It's the vehicle itself that allows me to get into a newer, better vehicle as time goes on. There's also the fact that I'm paying less and less money in interest. So that's kind of how our credit rebuilding plan works. And I mean, everybody's situation is different, so I can't give you a one and done solution for everybody.
Yeah.
We really have to sit down, have a consultation with that individual or that family, figure out what's right for everybody and give them options. And that's
Right.
really what we want to do. We want to have open, honest discussions with people so we can tell them, okay, look, this is what's happened. This is how the lenders are going to see it. This is maybe a way around it.
Mm-hmm.
But you have to be flexible. The lender has to be flexible. All parties have to look at this as, okay, let's try and get this done. And how do we get it done?
Here's a question for you. When I first moved to Canada, I was an adult, but I didn't have a bank account or any credit history. So literally I was like, okay, well, I need a car. I need to get an apartment. I need to do all of these things. And then it's like, well, let's check her credit. And it's like zero, nothing.
Right.
So if someone has no credit history, is it still possible to get a loan with T&T and get into a vehicle?
Absolutely. So let me just clarify one thing. So you mentioned getting a loan with T&T.
Right.
So T&T Honda, we're not a bank.
Okay.
Right? We sell vehicles, and there's a lot of, confusion about that because we make it so simple for people. Because when they come to us, they buy a car. We also help them arrange.
Yes.
And the key word there being arrange the financing.
Okay.
So we have roughly 20 odd lenders that we work with, and what we do is we act as brokers.
Right.
We collect the information from the customer, and then we work with the financial institutions to place their loan at a rate, a payment, and so on that's comfortable for that customer. So a lot of people think, oh yeah, T&T loaned me the money. Well, no, we didn't. It was the bank that did, but we just helped arrange it. Anyways, went off on the side there.
No, that's perfect. That's okay. Important to clarify.
So when we talk about somebody who has no credit versus somebody who has bad credit, it's a little bit different situation, because now when we talked about that character, that one of the C's, the banks really have no history to go back on, because the key thing they look at is, okay, how has this person paid before? So if you don't have a credit report for whatever reason, maybe you're young, you're a student, you just came out of school, or like in your case, you've just recently moved to the country, your credit report doesn't follow you from overseas. Right. So even though you may have had something back at home, you don't have that credit report here. So what do you do about that? Again, it's all about being educated and informed. Knowing this now, what can a person do to make it attractive for a lender to say yes to them rather than no, you don't have any credit? So you need to give them something extra, something a little bit more than somebody walking in off the street who does have a credit report. So what would that something extra be? It's some kind of security that the bank is looking for. Because remember, they're always dealing in what happens if.
Yes.
What happens if this person doesn't pay? What happens, right? So how do you give a bank or a financial institution that security? You can do it in one of two ways. One of them is with somebody who does have credit, right? That will back you up. So that's a cosigner, right? So maybe you have a family member, maybe you have a friend who has good credit and will back you up in your application. So that's one way to do it, is with a cosigner. Now, the one thing to understand is when you're approaching a cosigner, it's not somebody just off the street that you're looking for, right? It's somebody who is going to be able to qualify for not only all of their obligations that they have, but over and above that, yours. Because the way the bank looks at it, if I'm the person that's applying and I don't have any credit, and Emma, I get you to co-sign for me.
Mm-hmm.
Emma not only has to be able to pay for her stuff, but if I don't pay for mine,
Yeah.
Emma's got to be able to pay for that too.
Yes.
So you have to have the capability and the capacity to be able to do that. So that's what the bank's looking for in a cosigner, somebody who's able to take on that additional debt as well as has the credit worthiness to be able to do it.
Right.
Okay, so fine. Let's say I'm brand new to the country. I know nobody here. I have no friends, no family, whatever the case is. So I don't have a cosigner. So then what? So then the only other thing that you can really look at is injecting money into the deal.
Right.
So what I mean by that is putting money down,
Mm-hmm.
right? So if you're looking at a $25,000 car, if you put 10% down or 20% down, that gives the bank a bit of a comfort level.
Yeah.
You've got some of your own money tied up in that car. Number one, you're not financing the full amount.
Mm-hmm.
Okay. Secondly, in the situation that they do have to come back and take that vehicle from you, they've already got some built-in equity in that car.
Right.
So they're not going to take a financial loss on it per se.
Right.
Right. So again, the banks are always looking at it as a worst case scenario. But by you coming and putting 10, 20, 30% down, that makes your case a lot stronger than coming in no credit, no money down.
Yeah.
Well, what do they have? They have a name and they have some information about where you work, and that's about it.
Right.
So would you lend money to somebody like that without any history? Probably not.
Exactly. It's a pretty risky spot to be in.
It is. So now, all that being said, there are sometimes ways that we can get around these things. But again, we have to look at it on a case-by-case situation.
Right.
Everybody's finances are different. There might be some ideas that we can come up with once we ask the right questions and say, oh, maybe if we looked at doing this, that might work, and so on and so forth.
Right.
Or, come up with some options. But just as a general thing, if you don't have any credit, the two things that are going to help you is a cosigner or money down or a combination of both.
Is it better to lease or finance if your credit is less than perfect?
Great question. Really, when you're leasing or financing, you're still borrowing the same amount of money. It's a really, really tough question to answer, because if I'm looking at a $30,000 car, whether I put a loan on it or put a lease on it, it's still a $30,000 car,
Right.
and I'm still looking for $30,000 to pay for it. The lease just allows you to structure the payments in a way where the payments are a little bit cheaper on a monthly basis.
Okay.
But you're still borrowing the same amount of money. The one thing with the lease is it's a co-ownership type of situation.
Right.
It's the leasing company that owns the car and you're leasing it back from them.
Right.
So from a legal standpoint, the leasing company has a slightly tighter hold on the collateral than just putting a lien against it, which is what happens in a finance situation. But generally speaking, it's not going to be any different.
Okay.
Right. So if you can qualify for a finance, you'll qualify for a lease, and vice versa. It's not to say that, oh, if I have some tough credit, I need to apply for a lease. No, it doesn't work that way.
Here's a cheeky question. Does T&T Honda make money from the loans?
Okay, that's a great question, because again, there's that perception that we're the ones lending the money.
Right.
And as we talked about before, we're not.
Right.
All we do is we help arrange it. So we've got these roughly 20 banks that we work with. So let's say, for example, it's Royal Bank, right?
Yeah.
So what we do is we collect your information. We send that off to the Royal Bank, saying that Emma's applying for this type of vehicle, this type of money, and we'll negotiate with them and other banks to get you the best interest rate possible, the best payment, and then come back to you and present you, okay, these are the things that we have. Which one would you like to go with?
Right.
Then you say, okay, I want to go with the Royal Bank. So what happens? The Royal Bank sends us a check in full for the amount that you purchased your vehicle for. Now you have a loan with the Royal Bank and you're paying them back.
Right.
So who are you actually paying the money to?
To the
Royal
bank.
Bank, right? So who's making the money on the interest? Royal Bank, right? We made nothing on that transaction. We are just trying to make it easy and convenient for that customer to be able to do that, rather than running around to 4 or 5 different banks trying to figure out who's going to give them money. That was the way things were done way back in the day, right? You'd have to come in with your own money arranged or cash money to be able to pay for a vehicle. Then we started to get into this area of arranging financing for customers. And the banks actually have separate centers set up for us. They're called dealer finance centers.
Okay.
So we actually have a direct line into the banks electronically saying that, okay, I've got this customer looking for this type of car, looking for this type of money. What can you do to help?
Okay.
Right? So electronically, we're able to submit all that information and negotiate the deal back and forth as a broker on behalf of the customer. Because again, we don't make a penny on the interest. So
Right.
we're just trying to get you something that's the most affordable possible, because the better deal we can give you right now, guess what? The more likelihood that you're going to come back and buy again from us.
Exactly. So, to wrap up, do you have any stories that come to mind where you've been able to help a client get into their vehicle or buy their car? That's a really nice happy ending story for someone that maybe came in and didn't think that they'd be able to do it or make it happen, and you've been able to do that for them.
Oh boy, so many. So let me just think about the most recent one. So I had this young couple. He was about 20 years old and she was 18 years old.
Okay.
And they had this Subaru WRX, really fancy car,
Nice.
right? But their situation was such that they had a vehicle that they had traded in, which had negative equity on it. So when I say negative equity, what that means is the vehicle they had a loan on it.
Right.
The amount they owed on the loan was more than what the vehicle was worth.
Oh.
So they took that vehicle, traded it in on this Subaru. Okay. So number one, they paid a pretty penny for the Subaru.
Yeah.
Secondly, they had about, I believe it was $7,000 of negative equity from the previous vehicle.
Okay.
So not only did they finance the Subaru, they didn't put any money down, obviously. They also added an additional $7,000 to it. So they had almost a $50,000 loan on a car that was worth about 40.
Oh.
Right? So young couple, I mean, they're staying at home. They're with her parents, right? So, I mean, they don't have much for expenses and stuff like that because they're living at home with family. But here's a young couple trying to get on with life. And now they've just indebted themselves to the tune of $50,000 on a car. No matter how good the car is, it's going to depreciate, right?
Wow.
And with already extra money loaded it at the front because of the negative equity on the previous car, they were in a tough situation.
Right.
They came in and said, okay, listen, we can't afford these payments. They were paying almost $1,000 a month, including insurance on this car.
Wow. Well, that's a perfect example of like, oh, it's shiny and new, and I'm just I can do it, so I'll just sign here and I can take it.
And that's the thing about being aware and being knowledgeable about your own finances and situation. It's always nice to say, yes, even though I can afford it or I am approved for it, should I really get it?
Yes.
Does it make sense? Right? Yeah, I might be able to buy that $1 million condo downtown, but should I get it?
Right.
Does it make sense? So they bought what they thought was their dream car. They got into it. Everything's happy for a few months. But then they start to realize the real situation here.
Yeah.
There's a lot of money that they owe. There's a huge payment. They're young kids.
Yeah.
Right? They're starting to think about, okay, I want to go to college. How do I pay for it? Take on more debt or what? So anyways, I was able to sit down with them and kind of like a big brother or father, I guess, talk to them and, putting the car aside for a while, just trying to figure out what they had in mind, what their goals were, right? What are they hoping to achieve here? The main thing that they wanted to do is they both wanted to study, and they both wanted to get some kind of further education other than just high school. But with the weight of this debt on them, they were pretty much tied into working full time to just be able to pay for this car that they have. Aww. Right? So they almost felt stuck in that way. So we came up with a plan that allowed them to downgrade their vehicle significantly, right? Were they happy about it? Of course not. However, it got them down to almost half of what they were paying.
Wonderful.
Okay. And they've got a reliable transport now.
Yeah.
It's not sexy. It's not fast like their Subaru was, but whatever. Exactly. Right. It gave them a vehicle that allows them to now have that flexibility that, hey, I can work part-time. I can go to school. I can get an education and come out of this with a job, hopefully, that's going to pay me a lot more down the road.
That's life-changing. That really is life-changing.
Right. And I guess that's the thing is that, okay, we sell solutions when it comes to transportation, but there's an underlying theme here. The one motto that we talk about all the time is steering you straight. Yes. Right. So we always want to do what's right for the customer, which may not necessarily be right for us. Like I could have sold them a vehicle, put them in a $60,000 loan or whatever the case is, because the mom was willing to co-sign.
Oh, wow.
Right. So, I mean, I could have done that. However, I didn't feel right about doing that because I'm looking at it. I've got kids at home about the same age as this couple. Right. So what would I want to happen to my kids if I wasn't around, right?
Right.
So whenever we're not sure about what to do or there's a fork in the road about should I do this or should I do that, we always look at the steering you straight and what would we like to do, or what would we like to have done with us, with our family members. And that's kind of the thought that we look at. So anyways, with this couple, they're driving this vehicle now. Before COVID happened, I mean, they had scheduled to start in September for school. So I'm not sure how that's worked out for them, but that was the plan. And at least they had something in front of them that they could look forward to, rather than roughly $1,000 payment for 6-7 years on the vehicle.
That's incredible, because that changes the big picture. Down the road, they're going to get the education, they're going to figure out their credit's probably going to get better, they're going to be able to save some money, all of these things. And then, you know, who knows when they'll be able to get into that dream sexy car anyways, because of that opportunity that's been given to them, as opposed to just going downhill, spending all that money every month. So that's really, really cool. I love that story.
And that's where this whole idea of flexibility or compromise comes in.
Yes.
So if they were dead set on getting the car that they originally came in looking at, they would have walked out of here with a $60,000 loan.
Yes.
Right? Because of all the negative equity that they would have rolled in, not once, but twice.
Yes. Yes.
Right? And they would have got approved for it because the mom was really, really strong. Right? She had the credit worthiness to be able to accommodate that. And she was willing to help out the kids because, hey, she's a good mom. That's what she wants to do.
Right.
Right. But I mean, yeah, you're right. You know, if people are flexible and they understand what the long-term implications are, then they can set themselves up for even better things down the road.
Yes. So a final quick takeaway on 2 or 3 things to just keep in mind when you're walking into the dealership. You're not quite sure where your credit lies. What should you just keep in the back of your mind when you're looking for your vehicle?
Ask lots of questions, okay, and make sure you understand the answers. So anybody that you're talking to should have the heart of a teacher. So it's not a matter of, I'm here to sell you a vehicle. It's a matter of, I'm trying to fill your transportation need. And what does that mean? Make sure that you understand everything. If you don't understand, take a step back.
Right.
Find out, okay? Be informed. There's a lot of trust in people, right? Which is great.
Yep.
Okay. It's amazing. So we tell you to sign here, you sign there because you want that vehicle.
Yes.
Right? That's awesome. Okay. And we need trust in life. However, you also have to be wise.
Yes.
You have to understand. Okay. And you'll get that within the first few minutes of talking to somebody. Totally. Is this a salesperson, or is this somebody who truly has my best interest in mind? So that would be number 1, is be informed, ask questions, and understand what's being said. And if you don't understand, don't commit to anything. Number 2, don't let yourself get caught up in the heat of the moment. Vehicles are very much an emotional decision as well as a logical decision. Logic dictates, hey, I need a car to get from point A to point B to be able to do my work, to get to work, those kinds of things. The emotional side of it comes, well, I want that shiny new red one, right? And because that'll make me feel cool and look cool as I'm getting to work. Yes, it's an emotional decision. In our culture, vehicles form part of our personality, our persona. So that's amazing. Okay, that's fantastic. But when it comes to that, we also have to take it logically. Yes. Right? Think about the long-term implications, because a vehicle is never a good place to park your money because they do depreciate. Yes. Right? Yes. So you know that going in. So be wise about it. And don't get yourself caught up in the shiny new stuff and saying, oh, my friend just got a new vehicle, so I need to get a new vehicle. Right? There's so much of that in our society. The other part of this too is we're very much a payment-driven society. Yes. So if I can afford the payment, I can afford whatever it is. Right. Right? Be it that new Louis Vuitton bag, be it that new sofa, be it that new car. Yes. Right? If I can afford the payment, I can afford this thing. Okay, fine. But the more and more payments you stack on, the more and more obligations you have. Yes. So when we talk about that young family, right, that young couple, they took on a huge obligation, which kind of restricted them from moving forward into what they really wanted to do. So be aware of that.
So if anyone has any questions, they can reach out to you quite easily. What's the best way to get in touch with you if they want to ask you some questions about any of this?
Probably the easiest way is to drop in so we can have a face-to-face, because when it comes to things like financing or just credit, there's so many different things that we need to look at. And it's so much easier to actually talk about it in person.
Yes.
So we can explain with paper and pen, maybe pull up websites or whatever that are there. So that would be, in my opinion, the best way to do things.
Perfect.
However, in the world we live in right now, obviously there's virtual ways that we can do this as well.
Yes.
If there is something that customers have questions about or need some guidance on, just call the main phone number, ask for me, ask for one of my finance managers. We're all trained in the field. My background is as a finance manager.
Okay.
I used to work at the Royal Bank. So I've got a little bit of knowledge when it comes to these kinds of things. So yeah, we're here, we're happy to help. And it doesn't mean you got to buy a car.
I love that sentiment that having some questions doesn't necessarily mean commitment to buy a car. So feel free to reach out and have a discussion about how you can finance your next vehicle. Thank you for listening to today's episode of the T&T Honda podcast. We'll be back with lots more for you very soon. If you enjoyed this episode, please feel free to like, share, and of course subscribe to keep up to date with everything that's going on. In the meantime, check out tnthonda.com and we'll be back with another episode very soon.
'Cause T&T Honda steering you straight.